Hey everybody, it's Pete. I just wanted to review a couple of questions that were posted in Discord in reference to the profit maximizer and also using a buy stop. So Tom is asking questions about getting in on Moderna, which has actually been a really good idea. Last 2 days, really good news. So first of all, great job being in a stock that has an edge. But I just want to review the trade, but more specifically, which profit maximizer. So I want to first start out with which profit maximizer. I'm actually going to start out there, right? Which PM to use, right? So less obvious equals momentum PM. Better order flow and volume equals trend PM. So we need to be very clear about that because the one that we're using is going to be dictated by the quality of the idea. And obviously, Moderna has fantastic order flow at this particular moment, okay, especially the last couple of days. So Tom is actually talking about getting involved, he said, at 10:20, which is about as perfect of a time as you could possibly get. So somewhere in this window over here, getting involved, right? So let's just put that in there. Got in at 10:22 based on the moving averages, what looked like a profit maximizer setup and in the chat room. So profit maximizer is after the stock has moved into a initial profit target. Okay, so I just want to be clear about that. Profit maximizer is exiting a trade or when it reaches a certain destination, maybe average true range. Okay. All right. So based on the profit maximizer, one should still be in the trade. So this question was asked here at 12:07. So we're going to work our way through that. Okay. So first of all, the profit maximizer that we use, if it's, let me go back here, the momentum profit maximizer equals for long, something that you bought, the low of the previous candle. So that's it. Hits that previous low, you're done. This one is a little bit different. It's the 10-period simple moving average. The violation, which is what we're calling it. I'll explain what that means in a second. Which equals close below the 10-period moving average plus the next candle breaks that low. So it's actually a two-step exit. And I'll show you exactly what I mean. Okay. So you might want to take a screenshot of this. Okay. So if we're talking about MRNA in this particular instance, because the conditions over the last 2 days, you got this gap, you got this great price action, and you're following up and pretty darn good entry here too. Not quite a 2-day breakout, but pretty darn close. And you actually, the next candle, you actually got a nice follow through as well. So you got everything working in your favor. So at this point, it would not be the momentum profit maximizer. It would be the trend profit maximizer because you want to maximize when the juice is on the trade, when there's plenty of stuff going on in the idea. So in this case, we'd have the 10-period moving average in here. So I'm just going to bring this in here. I'm going to make this 10, and we're going to walk through what the exit would have been on this particular idea. So you can see here for the entire morning, essentially from this inside candle breakout here, you're just getting follow through. This candle pulled back here, did not trade below it. This candle right here is the first place that it actually closed below the 10-period moving average. This one came close, this one closed below. So that means then the next candle needs to break that low, which is what it did. So technically that's the exit right there at 213.91. So you actually have, this is just an incredible trade getting involved at 10, even if we say here 10.20, whatever this exact price is here, that's a $7 trade, and the profit maximizer keeping you in the idea. And look at that. You didn't ride this down for another $3. So I just want to be clear about which kind to use is chosen before the trade based on the quality of the idea. I'm actually going to put that in there. Right? Based on the quality of the idea. And we're going to hop on the second part over here. Okay. So Tom, this is actually not correct. It's not two consecutive closes below the 20. it's one close below the 20, then the next candle breaks that low of the 10, not the 20. So I just want to correct myself there. It's closing below the 10, and then the next candle needs to break. Now, we've actually had a bunch of examples recently, and I'm just going to use this as an example just to pretend so that you understand what we're talking about. Let's pretend that this candle right here broke below the 20-period moving average, and that's the exit. I just want to use this as an illustrative purpose, which is why we do the two-step. The next candle did not trade below that, so that you were not stopped out. Now, if this thing actually trades back above the 10, you actually reset it. I want to be clear about that. Then you need another close below. But these two candles are a good example of pretending that this is where it broke down and the next candle not taking out that low. This is where it actually happened. I just want to give a visualization of that. The second thing I want to talk about here, which is a very underutilized thing. So Dustin did one thing really, really awesome here that I want to talk about. And the other part, I just want to shake him out of the thought process and everybody really about how far something can go, which is literally why we use the momentum, any profit maximizer in the first place, is we don't want to put limits on how something can go. So the reason we have initial profit targets is to justify the risk. And I know Dustin's talking about this in the context of the Fed, but I want to make this into a bigger lesson. Okay. The initial profit target is used to justify the risk. It's not to place limits on what the stock can do, because once it hits the initial profit target, then we shift over to profit maximizer mode. So that's an important point. But the other thing I want to talk about, so again, never thought it would continue. And the Fed, we don't want to put limits on what it could do. Clearly, the stock rocketed again today, right? So that's something we can all learn from. The other part that I want to talk about here, though, is set an alert to get back in at 200 and decide to get back in. Whether you use an alert or a buy stop, this is a great habit to develop. So great job on that, Dustin. So hopefully that clears everything up. Anybody has any further questions on that, we can talk about that on the next coaching session. Okay, thank you.